Okay, so hopefully you can hear me, you can see me as well. Let me double check. I have already our YouTube channel open and the Facebook streaming at the same time, just to double check that you can hear me, and you can hear me loud and clear. Perfect. YouTube works, Facebook works, lovely. So I only need a thumbs up from my colleagues, and for you maybe, just to confirm that the audio is fine. I'm facing a bit of some problems lately, but hopefully everything works perfectly. So, okay, until I got some confirmation from you guys, in the chat box, I will just start actually doing a briefing, as I said. Okay, so yes, okay, thank you, Constantine, for your confirmation. Thank you very much. So again, before we start and we go through the charts, by the way, you can ask anything you want. I can cover anything you want, any asset you want, as always. So before we do that, actually, I will try to steal 5 minutes from you, just to bring you up to date if you are not up to date so far. Okay, what's going on today? So it's a bit of a quiet, a bit of a choppy day. However, we have seen actually trends continuing in the forex industry. We have seen some move. It's not a completely choppy day. It's not a completely quiet day, even though from the data perspective, at least, we have already seen from Germany, and we're expecting actually some speeches like Miss Lagarde, retail sales from New Zealand later on today, and so on and so forth. But just as I said, a quick briefing of what we are standing. So first of all, you should be aware that in general, we'll start with the equity markets. We are seeing some kind of a weaker trading so far in regards to stocks and bonds. So stocks and bonds are a bit weakened this week. So far this week on the this Monday 22nd of February. So we have seen some selling pressure, especially in the Chinese shares. Okay, and a lot of the news that have been priced in already. What we mean is things that we were already expected. So we have seen markets already pricing those news, and now they actually confirm. So remember that we are like repeating again and again that lately, if not the whole 2021 and since last year as well, is all about yields. So the moves that we're currently seeing in the equity markets have to do with yields. Okay, so the anticipation, as we are saying, of higher inflation on the background of positive development of the vaccine programs, of massive stimulus from the government, and etc., is something that that supports the belief of a higher inflation, therefore higher yields, and that's something that's some kind of a pressure on the equity market. So the jump in interest rates and the refinancing cost have weighted lately on the equity markets, and they continue to do so. So that's why, if you're following us and if you are checking our analysis every day, you can see that Stuart this morning in his report stated that it's all about the yields. And what we mean by that, equities are heavy due to yields, due to the fact that yields are being well supported. Okay, so bonds is under pressure, equities are under pressure. This is not something new. This is something that we have seen for the whole February. Okay, and that has as a consequence a lot of rally on other markets, such as industrial metals, copper, for example, or look at Vix Volatility Index. Okay, so that's the overall picture. Also, we have seen Bitcoin on a rally. For the time being, dollar recovers slightly from its lows. That was because we have seen some kind of they say haven't currencies such as yen and Swiss to suffer. Okay, it's all about reflation trades and progress in vaccination worldwide. Okay, especially in the developed economies, US, UK, Europe, Japan, and so on and so forth. So this helps commodity currencies, Aussie, New Zealand, Canadian dollar, and commodities, copper, aluminium, okay, not so the precious metals, but the metals, as I said, to boost a sentiment for riskier assets. Okay, this is why we're seeing commodities being lifted. And by saying commodities, you shouldn't think gold and silver, for example. Commodities are commodities. We have a lot of commodities, a lot of metals in the market. We have aluminium, platinum, palladium. Think about all this. Okay, so it appears that by losing these expectations of a higher inflation and the better and the positive development of the vaccination program, is something that helped and continue to help a boost in commodities. Okay, and okay, before I go to the Bitcoin story, okay, I would like firstly to highlight that remember that we have discussed lately, and if you're following the news, you have seen that there is the so-called virus mutation. So this has been left aside for now, okay, because of all this good news that we are keep having in regards to um, lower decline, if you prefer, in infections, increasing vaccination distributions, very, very good results from the people that have been actually vaccinated with if I'm not mistaken, Israel called for a 94% effectiveness of Pfizer vaccine. So all these good news are actually boosting the market, the commodity markets, help slightly dollar, and if you prepare, we have seen also we have seen also pressure on the stock and bond markets because people are shifting somewhere else. They're shifting their attention to other assets. So for the time being, okay, we have seen Nikkei closing actually backing the trend and closed firmer yesterday night, and it was heated lower through afternoon action as well. DAX FTSE lower so far today. Okay, something that also helped the European stocks were the IFO this morning, the business sentiment. Okay, it came a bit better than expected, not significantly, so it didn't help much these indices. That's why DAX, GER 30, and FTSE UK 100 remain under pressure. Okay, the same stands for NASDAQ, USA 100. Otherwise, USA 30, S&P 500, everything it's under pressure. They are losing nearly, actually more than 1%. Okay, and Nasdaq more precisely is losing nearly 2% because we have seen tech companies, tech stocks, heavily under pressure. Keep an eye on the yields. Okay, bonds have cheapened despite the drop in risk abated because yields are rising higher. So everything are correlated. So if you don't know all these correlations, try, study, learn what's going on, start to understand why we have this kind of behavior. Okay, that was the news of the day. As I said, we have a lot of we had a lot of speeches, and not any other data other than the retail sales from New Zealand tonight. But we have a lot of speeches like if I'm watching over here. We have Mr. Powell is tomorrow, but we have Lagarde, Bowman today. It was Johnson as well. So it's all these that they they're taking place today. But think a lot about yield differentials. Okay, study, go to our videos, check how the yield differentials affect the market. Correlations are actually a very good tool for trading as well. Okay, so okay, I will before I actually shift to the MT4, I will give you quick examples of what we call yield differentials, and I will take Aussie dollar for example, Australian dollar. Okay, so Australian dollar, if you are following commodity currencies in general, they have been they have been in a rally since after the first lockdown since April. So it has actually today posted another fresh trend highs against every single other currency. Okay, in synchrony with its Australian yields that are rising more than any other peers over the last week. On the other side, we have seen UK yields that have been there have been those with the biggest basis points rally. Okay, they are up to the upside as well. But both Australia is the number one, keep rising. It has posted a lot of their yields. The Australian dollar has been synchronized with Australian yields, and they're rising more than any other major currency. The second is UK one, which has also posted the biggest basis points rally, and the third then comes the US. Okay, also to the upside, but not as pound and as Aussie. Okay, so that's what gives you that is that okay, by checking the yields, you know how the Australian dollar against the dollar will move. You know how pound dollar cable will move by just checking what's the difference, the points, the yield differentials, okay, the difference between the Australian yields and the US yields, or the Australian yields and the UK yields, or the pound yields and the dollar yields. Hopefully you follow me. So by checking the differences and the distance between them, it gives you an indication of how the corresponding pair will move. Okay, so that's for your own information. So it's another way of getting benefit of the correlations that we have in the market. Okay, okay, that was it. So I will shift to the actual MT4. Let me just share screen. Okay. Share screen. I think you will be able to see it right now. Perfect. And I will remove my chat. Hi everyone. Hello. Pound prediction. Okay. I'm seeing your questions. No worries. Okay, why not? Arun 26 mentioned about pound. I just talked about pound. I just taught you about the yield differentials, but since you asked for it, and it's something that I really wanted to cover, is the fact that okay, pound is a good thing to start with, actually. So as you can see my MT4 right now, which I have euro dollar, not pound, not cable, sorry. I wanted to start with the biggest mover today, but since you asked about pound, let's start with pound. So pound for since Friday crossed the 140. For those that they have been here on Thursday, on the live streaming on Thursday, they're aware that this round number, 000 number, is key psychological level, not only intraday, but in the whole history of pound. It's a triple zero level. It's key, psychological, it's significant, okay? Because on those levels, we might see retracement, sharp retracement, end of rally, or a break of those area, of such area, the ones we call psychological, especially if it's a triple zero area, is something that suggests long term indications. Like, so for example, we have 140 over here that broke since Friday, okay, and the asset keep spiking higher. The very next key psychological area is 142. Why? Round number, first of all, but second, is an area that it was retested back in 2017. Okay, remember 2016 we had the Brexit vote. Retested, but it quickly turned below it. So this area in between 140, 142 is a 5-year strong, really strong resistance area, okay? But in general, it's a key area to be seen because it might have been key resistance area for the last 5 years, okay? But before, it was a key. I cannot go further backwards, but the actually you can see, okay, it has been a key resistance area the last 5 years, but before that, since 1993, okay, I cannot go backwards more in my MT4, but you can see that it was a key strong support area as well. So a break of this kind of area is significant, especially for long-term traders, because if the asset managed to break that level, to break completely that area, I mean, not to repeat itself and do what it did back in 2017-18, I mean, to literally go above 142 and sustain a rally, then guys, what's next? The ceiling is really up to here, back to 160 territory, or even, okay, this is a very long term, I know, but it's just to give you a quick briefing, okay? So you, in case that 142 is broke significantly, then resistances that you should really try to find out are coming back to nearly a decade, okay? 149, 157, so on and so forth. This is a long term, okay, just for your own information. Now I guess Aaron is asking me about intraday picture, so let's go down and see what's going on, okay? And just to highlight that we have retested, we have retested earlier today the 140.50 area, right? Let me just, okay, here we are. I have zoomed in. So it retested 140.50, nearly more than 50 overnight during the Asia session, right? It turned slightly lower, then recouped some losses, and it's like it's ranging a lot, okay? It's a bit in a consolidation mode. Maybe because we have a lack of data, but also maybe due to the Prime Minister Johnson. We had Johnson saying that conditions to his lockdown are being met. So this might be the first step to ease lockdown restrictions, as he said earlier, from the 8th of March. This is something that kept a bit of a decision in the in pound, even though that's not a really a key mover for cable. Okay, um, so it's the more precisely might be a bit of a trade taking profit reaction, because it's already a bit over. It remains buoyant. Okay, of course it remains buoyant. You can see that it's being in a rally. Cable is being in a rally since okay, it has been after the pandemic, but more precisely it has been in a nice regression upwards channel since August. Okay, you can see that it's really following this kind of a regression channel, like extending higher and higher. So today's stalled might be a bit of a profit taking plus a bit of a pullback as a correction in this long term upwards channel. So you can see that it reached the upper level of my regression, extending for 1, 2, 3, 4, 5, 6, 7, 8, 9, nearly 9 days in a row outside Bollinger's, so overbought. That is, of course, further steam to the upside. You can see that from the RSI, that is at 72, but there is still a lot of space to the upwards. So intraday, this kind of choppiness, if you prefer, this kind of sideways movement, ups and downs, small ups and downs, by the way, okay, not significant ones. Small ups and downs might be a bit of a pullback, a bit of a correction in this long-term upwards channel, but the overall picture for cable, it doesn't really change. We have a lot of momentum to the upside, and if I just show you MACD, because I'm hiding it right now, you can see that it keeps sloping to the upside. RSI the same. There is steam to the upside. So overall momentum, my dear Arun, remains positive for cable. Now, this is a daily chart in a regression channel. Any flip, any turn below 139.80, which is the low of the day, okay? Any turn below that level, okay, could suggest a retest of the mid level of my regression channel as a correction. Nothing else than that, because momentum looks very strong. Only a break of the actual regression channel, more precisely the 50-day moving average. You can see 50-day moving average, which has been supporting the cable for many months now. Only a break below it, so a turn below 135 could suggest a reversal of this long-term upward channel. So as long as we don't see that, any pullback lower, it could retest the mid-level, the midpoint over here of the regression before another attempt to the upside, or even the low area as well, like we've seen here and here, the low level, the low trend line. But as long as this channel has been sustained, then any correction to the downside within this channel is just a correction and nothing more, nothing less. Now, for the 1 hour chart, it has been turned higher, remains below its highs. The MACD over here are lower, okay, suggesting that there is some kind of a pressure. But you can see that they remain positive. The same stands for other RSI, and RSI actually is pointing further to the upside. Let's put stochastics as well, which is my intraday indicator. So okay, I cannot really show it. Yeah, I can. You can see that they are turning slightly lower. So this suggests that overall picture remains positive, but intraday we might see another attempt to the downside, especially if it crossed this 140.16 territory, the 20 period moving average, because the stochastics are slightly started turning lower. They haven't confirmed a bearish cross yet, so let's wait and see. But yeah, a confirmed cross from stochastic could bring to our attention the 139.80 territory. That was for cable. Let's move on. Thank you, Lawrence. We have covered, my dear pound. Thank you for asking. Euro, dollar, okay, euro, dollar. Okay, let's flip to euro, dollar. Okay, euro, nice. Big bounce, as we can see right now. Okay. If you can't see my screen, let me know, because I'm worried a bit. There are some kinds of I don't know, some kind of like a bit it's behaving a bit weird today. So euro dollar over here, we have seen that it spiked higher on the US Open, extending the rebound from the Euro Open as well. So higher, jumping across the 121.50 territory, boosting further to the upside. As we said, keep an eye on the differentials. So let me just see what's going on over here, whether we had anything new. Okay. So euro, okay, let's see the technicals, because it's all about the technicals. So we have seen that the pair actually rebounded from 121 territory in the morning, key psychological level, round number, okay. It rebounded, turned higher again, okay. And this, by the way, is the 100 moving average in the 1 hour chart, the 121, okay. So this level, okay, this is my 200, okay, but if I put 100, you can see that 121, it's the 100 period moving average as well, okay. So okay, I will take it back to 200 as I have it. It's my okay, so what we have here, okay, yeah, so it rebounded, okay, it rebounded in the morning, and it keep extending and pushing to the higher, to the upside. Now that we are really that the US Open is like has just opened, okay. So rebounding, extending further to the upside. We have a swing higher again. This is actually the fact that this rebound is a very familiar technical level, because it's at the 121, so we could see easily rebounds or retracements on those levels. So okay, so just before I switch to my intraday setup, the one that I use for the 1 hour chart, I would like you to check this cross. Okay, it hasn't been confirmed yet, but if the 50 confirms a cross above 200, this is a golden cross, as we call it, a bullish sign, okay. But I will put the 1 hour chart in a second, just to give you a briefing on the daily chart. So in the daily chart, we remain in some kind of a range, if you prefer, since the beginning, since the mid of January. So from 120, 170, dipped down to below 120, rebounded, retested 125, turned lower, and now is retesting the 125 again for 1, 2, 3, 4, 5, 6, 7 times in February. So we need a, so okay, also this 121.50 is very, very crucial because it's the 50-day moving average. Can you see that? This is my blue line, 50-day moving average. So if today we have an actual close above it, not like that, not dodgy candles and some tails, an actual close, a decisive close above 121.50, a nice strong full body candle, then this could open the doors further to the upside to 122, even 120, 120, so 122, 120, 270, or even 123.50, which has been the highest in January. But we need a confirmation, a closure above 121.50, either today or any time within the week. Otherwise, if we don't see that, then the asset remains in a choppy sideways movement between 121.50, 120, 121.50, 120. So keep an eye on the daily chart. Also, something that confirmed the consolidation that we have seen in the daily chart, and also the flattening in the Bollingers. Okay, so keep an eye. So let me shift to my 1 hour chart. Okay, and I would like to change these settings to 9 and 5. Okay, exponential, because I want, I'm studying both exponential, I'm studying the intraday 1 hour chart, right? Oops, sorry. Sorry, I lost my microphone and my camera. My apologies. So, okay, yeah, I changed the 5 and 9 because I'm watching the 1 hour chart. Okay, is that clear? Exponential because it's in 1 hour chart, very, very fast environment, quick 1 hour chart. So, what I can see over here, if I zoom in, is first of all, parabolic SARS being well below my actual price action, suggesting that there is rising positive bias, the boost rising. So bulls are there fighting and winning for the time being the bears. If your parabolic SARS are below, far below the actual price action, this is a bullish signal, okay? But if they are very close, this is a reversal signal, so keep an eye on it. And also, I had 4 hours ago, of course, it's not something right that's happening right now, a bullish cross of the 5 above the 9 exponential moving average. This is something, this bullish cross indeed was actually confirmed, because you can see indeed after the cross the asset keep extending to the upside. So for those that they have been lucky and they have see that 4 hours ago, 3 hours ago, then that was clear a bullish signal, with RSI keeps posting higher, but MACD is a bit mixed. Like MACD actually is vice versa, slowing down. Yeah, but for the time being, the fast moving averages are keep extending to the upside, are keep aligned and aligned higher, suggesting that there is further steep to the upside. Parabolics are posting the same. And if I put my favorite stochastics, which are the ones that I use for 1 hour chart intraday pictures, let's see. So I will extend it so you could see it. Okay, they have crossed the overbought territory, but they haven't really turned lower again, so there is some kind of a steam to the upside still, as long as the red line, the green line, the fast line doesn't cross below the the red line, like what happened here or here. You could see, boom, turning lower, 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 and it started shortly. So keep an eye on stochastics and the fast MAs. So for the time being, for the very, very short time frame, euro dollar remains to the upside, but it's in a key resistance area is coming at 21.50. Okay. Overall, a bit choppy. We need to see a decisive cross above 21.50 tonight or anytime within the week. Otherwise, this level would be once again a retracement level that, like what we've seen here as well. Okay, so keep an eye on that. That's on euro dollar. Hopefully that helps you flex, bros. If not, let me know. I'm good. Thank you very much, Roman. What about... I'm not sure what you are asking me, my dear Zinc. Yeah, I'm not sure what are you asking me. Let me please clarify, okay? I will shift quickly to the questions from Facebook. Okay, give me a second. Facebook. I'm good, dear Sahid. Thank you. Do you have strategies to teach? Konstantin is asking. Konstantin, sorry, I have just seen that. I'm shifting from YouTube to Facebook all the time. So, yes, we do. Some are very well known. I mean, they're not our own. They have been created over the time from many economists, mathematicians, and analysts, traders, etc. We are teaching them like in our weekly webinars. So you can register this week in the webinar that you fancy, but if you're like really keen to see all the strategies that we have studied and we have presented so far, please go to our YouTube channel, click on the playlist that is it's called webinars for intermediates, for experts, for beginners, and you can see the list of all the strategies that we have covered so far. You are having some strategies on yourself. Good. Hopefully that works for you. So, any questions? How may I get help? By being here, first of all, my dear Kwambamir Zali. By being here, I'm here to help you anyway, so you can ask anything you want. Go to our webinars. Listen us. You can ask anything you want during the webinars. Study the material that we offer for free. And send us an email if you're struggling with anything. Let us know. What's your opinion on Euro Pound? Okay, Fejiro is asking about Euro Pound. Okay, let's see Euro Pound now. So Euro Pound, I'm posting that because it was from Facebook. So Euro Pound. Okay, let's shift to Euro Pound. Where is it? Come on. Euro Pound. Okay, I don't have it over here. I will open it then. Euro Pound. Sorry, I had a problem with my PC today, so I had to shift to my MT5. So Euro Pound, similar picture with the let me just, sorry. Okay, similar picture with the euro dollar that we have just seen. So look at that. I have all moving averages over here. both 5, 9, 250. So already a cross of 50 above 200 in the 1 hour chart, along with a rising fast MAs. So what that suggests to us, that for now, if the fast MAs are starting to, they are moving higher, but you know they have started to point to the right hand side instead of upwards. So maybe we've seen a consolidation the next few hours, but overall that cross suggesting a bullish overall picture. Okay, so even though that doesn't really satisfy our 1 hour chart, let me do them exponential to check whether they give us something. So okay, still to the upside, upwards. Okay, yeah, positive, from positive 50 to 100, but what matters in a 1 hour chart are really the 5 and 9. So the 5 and 9 are higher, suggesting that they are steam to the upside, but the fact that they have slightly turning like to the left hand to the right hand side right now suggests that a bit of a consolidation might follow. Let me put my pivot points on. Okay, come on, do I have them over here? No, I don't have them over here, never mind. Okay, so guys, you see, it was overbought outside Bollingers. So the fast MAs are starting to turning to the right hand side. So a consolidation might follow. But as long as the asset remains above that low, the previous low 120, 129, any rebound above it could suggest further steam to the upside. Okay. Yeah, but it's overbought. So yeah, if you see something similar with what happened here, you see overbought, consolidation, but it finally broke that floor over here, that previous low. If it crossed below the previous low, then it might retest again the 121 territory. Okay, keep an eye. We have seen euro dollar. Please, I can't fund to my account. Oh, that's weird. I don't know if it's your provider, my dear Maxwell. Please send this to our support team. You know, we have a chat in our in our main page. We also have an email address for support team. They are 24/7 here to help. Please send them an email right now. Please, can you explain your Bollinger Band setting with... Okay, just to clarify, my Bollingers are the default ones. I haven't amended them. They are not exponential moving average. What are the exponential moving average? Are only my 5 and 9 moving average in this 1 hour chart. 5 exponential moving average, 9 exponential moving average. So a cross of 5 above 9 suggests bullish sign. A cross of 5 below the 9, like here, it's a negative sign, it's a bearish sign. Okay, but the Bollingers, the gray lines that you have seen over here, are the default settings. I haven't changed them. You see, it's 20 period, 2 standard deviation. That's it. It's the default ones. Okay, and it works good for me, at least for euro dollar 1 hour chart. Let me keep moving. Since you don't have any questions, let me check Facebook again. Euro pound is being covered, my dear Fejiro. Euro pound, you said. Let me check. Okay. So how can I create an account? Condi, go to our page hotforex.com, and there is a button at the very, very top, how to open an account, okay? Yubi, you're saying that you have blown your account. It's not easy, but this suggests to me that you don't have a discipline. You haven't. I'm talking to Ward or EEP. I don't know if I pronounce it correctly. Did you use stop losses? Did you use targets? Why you have risked the full amount of your account and not a percentage of it? What have you done? Let us know. Thank you, Samir, for your good feedback. Okay, guys, I don't see any questions from Facebook, neither from. Oh, I have some from YouTube. Perfect. Oh, Maxwell, you sent them in. You haven't. Okay, I will chase for that, Maxwell. Okay, Maxwell, I have seen your comment. I will get back to you. Okay, I will chase to see what happened. Okay, why there is delay? Shouldn't be any delay. I will chase for it. So, can you please comment on dollar Swiss? Of course I can. Let me just go back to the dollar. You said dollar Swiss. Let's start with dollar Swiss and safe haven, both safe havens. So, actually, let me start with dollar yen. So, dollar yen, and the reason why I'm starting with dollar yen, guys, is because, okay, let me just, I don't know if you are following us, but on Friday, I think on Thursday, sorry, I mentioned to a report and to my Facebook Live that the Japanese yields and the US yields are the ones that they have a major difference. I was around 35 points. That's huge. This has as a consequence, in the long term, yen to be weaker than dollar. And this is indeed is happening. You can see that if I zoom out, okay, you can see that since the beginning of the year, dollar yen is moving higher. So that what that suggests, what that means, that yen is weaker than dollar in the overall long-term picture. Okay, so you can see how the yields are correlated with the currencies. So for now, is following in from my technical perspective at least, if I just change a bit the regression. No, that's good. Okay. Let me put it again. I haven't connected the highs properly. Okay. Oops. 0.5. The reason why I'm changing the deviation is because, remember, your upper line and your lower line should connect the highs and lows. Otherwise, you don't have a nice channel which you could use for target stop losses and etc. Okay, so can you see now? Yeah, it's connecting my highs, connecting my lows, so I have a very nice regression channel over here. And I might put a second one as well. No, that's not a good one. No, let me delete it. Okay, perfect. Okay, and I will put actually a second one. The reason why is because I want cancel. Come on, doesn't help me at all. Okay, I have that one, and I want oh my god. My mouse doesn't comply. Okay, never mind. I wanted to show you something, but it doesn't matter. It's not so significant. So here is my regression channel. You see, it's an upwards channel since the beginning of the year with ups and downs, ups and downs, ups and downs, but every time within this range. So yen has been under pressure the last 4 days and is continuing downwards today as well. And despite that peak higher earlier, it remains under pressure. Okay, so yeah, so it's pushing lower, falling from the highs that we got at 105, 106 territory. Okay, so so we have seen a bit of a shift to the yen. So the yen has been underperforming with Japanese yields lacking a long way behind the steep yield rise of other sovereigns. Okay, so the 10-year Japanese benchmark yield has lifted by less than a half of a basic point from a week ago levels. So that is what explains this dip lower for dollar yen falling from the 106 territory. Okay, so shifting lower, and the same stands for Aussie yen, Euro yen, Pound yen. Okay, so is due to the divergence. If we compare, is the synchrony of the yen with the Japanese yields. Okay, since the Japanese yields have been lacking a long way behind the steep yield rise, as I said, against the other yields, the same stands for the actual currency. So since the yield fell, actually it didn't fell, it rose, but less than the US yield. That's why we had a dip of the dollar yen. So the same dip that you can see against Aussie yen, Euro yen, Pound yen. So in general, yen is underperforming, and this is expected to remain the case. So the yen is expected to continue underperforming during the whole 2021, assuming that the reflation trade holds up. If the reflation trades are not holding up, then the yen is not expected to underperform. Okay, not expected to continue underperform at least. So from the technical perspective, we had a dip crossing my mid level over here, falling far away from 105, but remains in this upwards channel. So next support to be seen will be the 105 round number, and literally a pip away from the lower Bollinger Band area. Okay, or down to this regression channel that I have, but a better level, support level to be seen would be the 105 territory over here. But what triggers my attention is that long tail to the upside. This is something suggesting that, you know what, maybe this decline, this pull down might run out of steam already. Okay, so this might be the end of it. If I just go down to the 4-hour chart to see what explains this, okay, so you can see that it's chopping sideways for the last 1, 2, 3, 4, 5, 6, 7, 8, 9 hours. So after it turned lower in the Asia session, it jumped higher to 105.85 and turned back down again, but it's still holding some kind of a floor. Where is my shape? Here with some kind of a floor over here. Okay, So this suggests that, you know what, if it doesn't go below 105.35, then maybe this decline is run out of steam already. Okay, um, so let's go down to the 1 hour chart then, that it will be clearer. So then we had the bearish cross of the 5 and 9 exponential moving average 3 hours ago. Indeed, it's aggressively to the downside. Stochastics, if I can show you that. Stochastic, I can't. Let me just put it again. Stochastic turned indeed lower, and it continued pointing lower even though it's at 13 level. So it's already oversold. So yeah, we might see a retracement on that because it's already oversold. RSI came below 50, stopped at 38, and is turning slightly sideways right now. So yeah, this pullback might run out of steam already. So we need to wait, however, at the top of this hour to check whether it has run out of steam already. But what will give you a clear indication whether it's about to rebound again is if you see the asset turning higher again, and more precisely covering at least the 50% of this 1 hour candle. So getting back above 105.50, somewhere here. Actually, 105.45. It's more than the 50% of this big 1 hour candle. For those, of course, that they are very, very short traders. For all the rest, the overall picture could change if we see a shift above 105.57, which is the 20 period moving average. So yeah, but yeah, the stochastic looks oversold. RSI already started slowly to suggest a kind of a rebound. It didn't manage to move further to the downside in the candles, supported by the 20 period moving average. So this pull down might run out of steam already. Keep an eye on that. Yeah. But if you see on the daily chart further dip, then next support to be seen will be the 105. Okay. That was on yen. Let's shift to Swiss. Here we are. So dip as well. In general, what I said, safe havens today have actually benefited, like yen and Swiss. So we have a reversal. Swiss stronger than dollar, dipped lower, bearish cross 2 hours ago in the 1 hour chart. But again, similar to yen, the pullback is like it has found some kind of a floor. You see, stochastic RSI is starting turning higher again. MACD is anyway positive, suggesting that the overall picture remains positive. Stochastic hit the oversold territory and is turning to the upside again, but it hasn't really bullishly crossed yet, so we need to see a bullish cross for stochastic to suggest that we have a clear rebound. For the time being, it found the floor, so we must see a turn of stochastic higher, a bullish cross, along with a cross of the 20 period moving average at 108.975 territory. Overall, Swiss is in a narrow upwards channel, not a nice one, I will say, but for 1, 2, 3, 4 days in a row, it sustained gains above the 20-day moving average. Yeah, but not a very strong or daily momentum. But intraday, it looks that it has found the floor for sure. Gold. Okay, let's shift to gold. Gold. Let's start with the daily chart. Gold. Let's not forget that gold has been in a choppy downwards channel since August. So let me put my regression. Here we are. Decline since the August, and further decline since December. Down, 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 down. Posting some kind of a descending triangle. If you prefer, you see descending triangle since December, and continues to satisfy this descending triangle. So you should put that on your chart, because you see it rebounded in the beginning of February. It didn't manage to break the descending triangle. It drifted down. It didn't manage to break the support of the descending triangle. It rebounded today, since Friday more precisely. So it is satisfying this descending triangle. So now that we have a push higher, key resistance will be this confluence of 20-day moving average, descending triangle, and my middle line of my regression channel. So this is at the 118, actually 118.17, 1817 level. So key resistance area on this rebound. Okay, a close above it, a break above it could open the doors to the 50 and 200 moving average at 1850, 1860. But that's it. And this is unlikely. Why? Because momentum is very, very, very negative still. Let me put MACD as well so you can see. So you see, RSIs, first of all, in the daily chart remains below 50 for the whole 2021. Okay, for the whole 2021. Never managed to cross above 50 so far. MACD extending lower. You see that is extending lower. So the overall picture is still negative. So any correction is just any correction is just a correction before another dip to the downside, at least from the technical perspective. This is the daily chart. Now, if we shift to the 1-hour chart, we had a rebound. Momentum is still positive. RSI is at 70, having further steam to the upside, but sideways the last 4 hours. Okay, if I put my fractals, just to help me a bit, only a break of the 1800 territory, the latest up fractal, only a break above it and a closure above it in 35 minutes time at the top of the hour could suggest further upwards movement. If I put also my intraday picture over here, okay, fast MAs still pointing upwards, but not sharp upwards movement. So yeah, you need to keep an eye on that 118 territory, the latest fractal over here. A cross above it could turn the attention to 1810. Okay, but the failure to break that resistance area, it could turn the asset to the 20-day period moving average and the 1788 territory. But the momentum indicators over here are mixed. MACD is positive, RSI is flat, Stochastic is negative. So you can understand that this rally might already run out of steam. Very, very mixed. You need to be a bit patient. So, no other questions? Let's see Facebook. No questions. Euro dollar, we have already, okay. Bitcoin. Amiran Khan is asking about Bitcoin. Okay, let's shift to Bitcoin. Where's my Bitcoin? Here it is. Okay, guys. I know that you're seeing Bitcoin and you say, "Whoa, it might be the start of a sharp long-term rally. Might be the bubble might busted." As long as we don't see 20% decline, then this pullback, if you prefer, is just a taking profit. The reason is just taking profit, nothing else. I mean, people that have invested, once they saw that 78 being reached, they have decided to close some positions. But you can see that this turns just 2 days gains, nothing more. So I don't think it's a 20% dip. We are around, where is Bitcoin? 8% dip for the time being. So it's reaching back to its support level. Actually, let me get rid of this. Okay, and I would like to put Fibonacci extension over here as well, because it's crucial. If you see on this pennant over here, flag if you prefer, the 127 and 161, which is the round 50,000 levels, it was an initial resistance, now has converted into key support areas. So as long as we don't see those two levels being broken, the overall picture for Bitcoin remains strongly bullish. Can you see how strong the MACD is? You see how strong it is. And can you see RSI? It was on the oversold territory, overbought, turning lower, but is well above 50 still. So this pullback is just a pullback. It's just a correction. People that they want to cash out a bit. It's nearly the end of the month this week. So yeah. Okay. What I can tell you from the technical perspective is that Bitcoin remains overall strong. Momentum in the weekly and daily chart remains bullish. It's an aggressive rally. It was overbought the last 2 weeks, so it needed a bit of a correction. This is overall picture. Now, if you want to learn about the 1 hour chart, maybe, or the 4 hour chart, what I can tell is that indeed intraday it had suffered severe losses, but it's still above 50,000 and above the 45 level, which it has been actually the 127 extension, Fibonacci extension. So as long as we don't see this, and as long as we don't see a second day like to the downside, aggressively to the downside, and if we don't see tonight continuation of this dip, then this is likely to be just a correction, similar with what happened back in the beginning of the year, or like in the early of February. Can you see it was a dip down, then a bullish again, dip down, bullish again. So in this correction, it's over. So intraday, what I can tell you is that it's oversold already, but there is further steam to the downside. I will put my intraday setup. You can see that MACDs are still pushing lower. Sorry, not MACDs, my fast MAs. So my fast moving averages are keep pointing lower. Bollinger's is expanding lower, suggesting that there is further steam to the downside for the time being. This is a short time frame, 1 hour chart. MACD just turned lower. RSI, Stochastic hasn't really suggest oversold conditions yet, so there is some steam to the downside. RSI is at 30, so there is further steam lower, there is further area to be covered lower. So yeah, there is still a lot of pressure to the downside in the 1 hour chart. Okay, yeah, so hopefully that helps you. Let me shift back to the Facebook questions before I call it a date because I'm a bit tired, I'm afraid. We have covered euro dollar, my dear Jolly. So dollar, sorry, okay, dollar, dollar weakened than any other major cross. Euro dollar spike higher to 120, 150, but is struggling to break that level, remains positive, but if it fails to break that level anytime soon, or if it turns at 121, 25, which is the low of this previous hour candle, then we might see another turn lower and another attempt retest of 121 level. Overall remains sideways, bouncing between 120, 150, 120 all the time. So we need a decisive close above 120, 150 in order to suggest that it might get back to 123 level again. Before I call it a date, by the way, let me double check that there are no other questions. No, they are not. Perfect. Okay. Before I call it a date, I will finish with the strongest currency so far today, which has been Kiwi. No one asked for it, and the weakest is Swiss. Someone asked for this. It was Haiten that asked for Swiss. Swiss and yen are the Swiss, CAD, and yen are the three weakest currencies so far today, and the biggest gainers today is commodity currencies. Kiwi, Aussie are the biggest gainers so far today. So Kiwi. Okay, here is Kiwi against yen. I'm trying to find Kiwi against dollar. Here it is. Okay, it has been the biggest gainer so far today with more than 22% rally, extending its asset extending to the upside, but remains off its Friday's highs at 0.7335. Fast MAs have flattened a bit, suggesting consolidation for the next few hours. Stochastics has a bearish cross, so we might see a pullback, a correction, or a pullback. MACD is declining, RSI is declining, so we might see a correction or a pullback, but overall remains to the upside. It posted a fresh high that we have never seen it actually in the last 3 years. So it's back to 3 years high territory. So key resistance to be seen will be next in the long term will be, come on, will be the 2017-18, that double top over here at 145.50, 174.50. Sorry, this is the key resistance area, the area for the next few days for Kiwi. Remains to the upside, decisive turn of MACD above its zero line, RSI sloping higher and keep pointing higher. So overall picture remains positive. And intraday picture, it suggests that the rally is running out of steam, so we might need to see a pull lower again. That was Kiwi. So if you don't have any other questions, guys, I need to call it a date. I'm a bit tired. Let me double check whether I missed something. Okay, before I call it a date, I will make you a quick briefing of what you should really take care of today for this week, okay? So I will start vice versa. We have slightly weaker dollar for the time being. Euro to the upside, pound to the upside, Kiwi to the upside, Aussie to the upside. The weakest currencies have been yen and Swiss, so Canadian dollar as well. So safe havens, as we call it. Commodity currencies like copper, platinum, palladium are in a rally. Gold also in a rally, but temporarily in the short term, while its overall picture remains negative. So precious metal to the downside. Bitcoin has seen a fall of nearly 8% to 53,000 level, and this was something that I missed telling you. It was also due to Mr. Elon Musk, the founder, the CEO of Tesla, comments over the weekend once again. So Mr. Elon said that at the start of that, an email saying you have gold is not the same as having gold. You might as well have crypto. Money is just data that allow us to avoid the inconvenience of barter. The data, like all data, is subject to latency and error. The system will evolve to that which minimize both. So we can see that the comments of Elon Musk, that one, along with the fact that he said that Bitcoin and Ethereum seem very, very high, is something that weighted on the cryptos in general. But let me remind you the last announcement that we have for Tesla, that at the start of the month they will start accept Bitcoin. So that's something that boosted initially cryptos. So this pullback looks to be a bit of a healthy, if I can say, pullback correction rather than a potential significant decline. In order to suggest that we are at the end of a rally, we need to see a pullback of 20%. So we might see further slip, but as long as the asset remains above 50,000 or at least 45,000, then this looks to be a healthy pullback of this long-term rally. Okay, so that was on cryptos. What you should really keep an eye on this week will be the US Congress, because we have Mr. Powell testimony tomorrow, and they will concentrate on the 1.9 stimulus package recovery bill. So Mr. Powell will go to the Senate tomorrow, have a testimony again on another testimony on Wednesday. So anything that any hint in regards to the new policy, in regards to the stimulus, in regards to the rates, it will give us an indication of the future actions from Fed. But on Friday we have also the voting of the voting for the stimulus bill. So that might be the peak of the week. So keep an eye on US, okay? Keep an eye on US. What else? Also, we have inflation from Euro tomorrow, along with unemployment data from UK. Also, we have two central banks this week. New Zealand, which is not expecting to change anything, but also we have I think we had, did I miss it? I think we had two. It was just New Zealand. Yeah, it looks like it. Okay, New Zealand. A lot of durable goods and jobless claims from US on Thursday, inflation from Europe tomorrow, gross domestic products from Europe as well. But as I said, key will be the testimony of Powell, the voting of stimulus on Friday from the House. That might be the highlight of the week. Something that no one asked for was oil. So I will shift to oil before I call it a date. Last to be seen, oil. Here it is. Continues to the upside, breaking the 60 area once again. Well supported for for a long time. Some corrections, but again, further steam to the upside with a lot of positive momentum according to MACD and RSI. So it's following, continuing, extending its upwards movement. So key level to be seen to the upside will be levels that we have seen back in 2019, like 63, 64, or even 65, this double top over here in 2019, double top. So oil is very well supported from the fundamental perspective. Intraday now, again for 4 hours to the upside, extending higher, momentum is turning positive, so further steam to the upside. What can I tell you? You ask about Vix. Yes, we do. Let me show you Vix. Okay, oh, sorry guys. Where's my Vix? Oops, sorry. Here it is. Here is Vix Volatility Index. As you can see, after that dip that we have seen in the whole month, since last week we had a gap up at 27 level. However, since then is turning slower. So lower highs in the daily chart, lower highs. Let me get rid of some lines. Lower highs turn on Friday below the 20-day moving average and remains below it so far today. So don't forget that any gap needs to be filled at some point. So slowly Vix started to fill that gap, but there is a lot of steam until at least a lot of area to be covered still. But it's having some lower highs since last week. So the overall picture, the daily picture, is not clear. The outlook over here is neutral. Intraday, however, we had a rebound, but again, now we can see pullback with the fast MAs turning lower. So once my 5 cross below the 9, then we will have a clear pullback confirmation. For now, it's a bit choppy. Gold breaks 1800s. Good. Thank you for telling us, dear Senglai Hong. So turn broke my fractal. So next level to be seen, next resistance area is the 200 moving average, or that top over here, 1816. Okay, keep an eye on gold. Sorry. I'm running out of steam, guys. Sorry, I need to call it a date. I can see that there are no further questions. Thank you very much for attending. Hope you're having a great day ahead. Keep an eye on the news, on the calendar, and on the yields differentials. Take care. Have a great day ahead. And see you again tomorrow with an Instagram Live. And on Thursday with Stuart this time, with a live analysis again prior to the US Open and a discussion on the jobless claims for US. Thank you very much for attending. Hope you're having a great day ahead, and see you again tomorrow. Bye-bye.